Okay. Yes. Last week we started relevant costing. We spoke about the introduction to relevant costing, the fundamental principle of relevant costing. We also demonstrated how to identify relevant cost of material as well as labor. We then proceeded to solving question. All right. So the question we were solving on Ojuelegba Manufacturing Company PLC. So we could not complete the question. We solved the A part. So quickly, we are going to do the B part, which is report writing. Then thereafter, we'll move to solving another big question. So these are exam questions that you are going to meet, the kind of question you meet on the day of your exam. All right. So once we are done with this, if we still have time, we can do one more question. So give and take, we have about 2 more illustrations to go under this. Right. So you recall that in our last class on relevant costing, when we were solving the question on Ojuelegba Manufacturing Company Limited, the total relevant cost we computed was, let me remove that. So the total relevant cost we computed was 180,000 naira, okay? And then, of course, we stated all our assumptions. Even though in the question, examiner was asking that you should clearly state how you have arrived at your figures and the reason for the exclusion of other figures. So it's a given in any question on relevant costing, right? Anytime you calculate relevant cost, you must state the underlying assumptions. It is very important whether examiner asks you or not. You just have to state your assumption. Otherwise, you are going to lose valuable marks. All right, because in most cases, the assumption will carry more mark than the calculation that you think that you have done. And that's why it is essential at all time, you just have to explain how you have arrived at your numbers. So we have done this. Of course, I don't want to waste more time on this. When we are solving another question, we are still going to do the same thing. So I just want to mention that assumption is not something you are going to fabricate in a question. The information is already there. Examiner is only asking you to explain how you have come about your figures. Just tell me how you treat each line item. That's all. All right. So let's go to the B part of the question. In the B part, you are asked to write a report to the company stating whether the organization should tender for the project, stating the reasons why and the price, and bearing in mind that the competitor is prepared to undertake the project for 300,000 naira. All right, so that is the question. This is the requirement. Examiner is asking you to write a report. You recall at the beginning of for the introduction to the question, you are told that Ojuelegba Manufacturing Company PLC has approached you for some expert advice on Project X, a one-off order from overseas for which the company intends to tender. So the company has approached you. Who are you? You are an expert. What kind of experts? You are a management accountant. Okay? The company has approached you. The company is just a generic name. It's not related to any individual. Therefore, who is responsible within the organization? The person that has approached you may be the CEO, right? You could be the project director. You could be anyone among the management team, right? So the company has approached you as a management accountant. You are the expert endowed with requisite experience and exposure to provide advice to the management, okay, on what needs to do, on the best course of action that they should take, okay? So you need to first of all understand who is writing this report. To whom are you going to write the report? Like I mentioned, the company has approached you for some expert advice. So you are the management accountant in this case. You are writing to the management of Ojuelegba Manufacturing Company PLC. You then need to ask yourself, you as an expert, are you an expert embedded in the business, or you are an external consultant? So you need to establish that fact ab initio before you begin to write your report, because we have different types of reports. We have internal memorandum kind of report. We also have a letter kind of report. So you need to establish from the beginning where you belong. Are you an employee to the company, or you are a consultant to the company? If you are an employee to the company, you are going to write internal memorandum. You are going to write a memo to the management. But if you are an external consultant, you are going to write a letter to the management of Ojuelegba Manufacturing Company PLC. So as far as this introduction is concerned, it's not specifically stated who the expert is, whether it's is a professional embedded in the business, that is, as an employee of the company, or is an external consultant. So we are not told any of that. So you are at liberty to decide which of them. Whichever one you do is what the examiner is going to mark for you. All right. So in our own case, we are going to assume this expert is a management accountant embedded in the business, is an employee of the company. Therefore, we are going to write a memo, right? So whether you are writing a memo or you are writing a letter, the contents of your report will still remain the same. The only difference is that you must understand, if you are writing a letter, for example, your letter must show the two addresses, the address of the person writing the report and the address of the person you are sending the report to. So all of that must be there. All those salutations, dear sir, dear ma, you have to include it if you are writing a letter. All right. So your conclusion and all of that, okay, yours faithfully, yours sincerely, yours truly, yours whatever, all of that must be there if you are writing a report. But the main content of the report are going to be the same thing. All right. So it's the only thing is that, of course, when you are writing, you must know how to write a letter. You also need to know how to write a report. So when you are writing, memo. So when you are writing you are writing an internal memo. In this case, all those salutations, dear sir, dear ma, will not be there. All right. No need for any address. Just like the way you normally write an email, the same format for your email. That is the way your memo will look like. Okay, so that is what you are going to do. But in any case, let's solve this question quickly so that we can move to the next one. We still have a lot to do. So number B part, reports. Get out. B. What's wrong with? Have I written B before? Sure. Reports. Okay. So like I said, we are going to be writing internal memorandum. So you as an expert, you are a management accountant embedded in the business. Therefore, you can start with from the person that is writing the report, which is management accountant. Who are you writing the report to? To management. Next, your report must have a subject. Then writes subjects. Now, pay attention here. For the subjects, whatever you think is the subject is what the examiner is going to mark for you. All of you cannot have the same subject when you are writing your report. Okay? You can say evaluation of project X. Another student can simply say project X. Another one can say analysis of project X. Another student can say whatever you think is the subject is what examiner is going to mark for you. What is important is that your report must have a subject. So let's come here, evaluation of project X. Okay. Then also, your report must have a date. All right. Your memo must have a date. So any date, just put any date there. So I can come here to say December 18, whatever the date, 2025. All right. Now, again, this also apply to whether you are writing a letter or a memo kind of report. So you have to establish before you begin to write the method that you want to use. Are you using slant method or you want to use block formats? All right. So if you want to use block format, it has to be block format all through. If it is slant, it has to be slant all through. So you know all those the way you normally write your letters. So all those things must be there. Of course, you did business communication while you were in school. All those things you have been taught how to write a report, how to write a letter, and all of that. But again, all of that are still valuable here. All right. So now you can see from the introduction to this question, examiner told you that the company has approached you for some expert advice. Okay, so that means there's a proud discussion in relation to this particular project. So you can reference that when you are writing your report. You can then say that is, you are referencing evaluation of project X. So this simply means that you are referencing what has been discussed previously. Okay. So you are calling attention to the initial discussion in relation to project X. Next, you then begin to discuss, okay, your introduction. Like I mentioned, there's nothing like no salutation here. Dear sir, dear ma. When you are writing internal memo, you don't do salutation. Okay, nothing like salutation. What's wrong with you? All right, so nothing like salutation. So just go straight to introduction. So of course, when you are writing your reports, please, because you are writing to management does not have the time, okay, to be reviewing or to be reading voluminous reports. You have to make your reports straight to the point, very concise and then complete. All the ingredients that are supposed to be in the report must be there. Nothing should be excluded from the report. Whatever you think the management should be aware of as far as the report is concerned must be there. But don't write too much of stories. Examiner is not asking you all of that. In the B part of my question number 1, I finished that report. In fact, I wrote like 3 pages. I just dump it. I wrote like 3 pages. Let the examiner go and be picking anyone he or she likes. You're on your own. Nobody asks you all of that. All right? Because you have to understand the person you are writing the report to. Management does not have time for voluminous reports. Just tell me what I need to know. That's all. Your report must be very brief, concise, and complete. Remember, in the question, examiner has told you the information, what should be included in your report. You have to write a report to the company stating whether the company should tender. That means you need to advise, stating reasons why should they tender, and the price that they should quote. Bearing in mind, competitor is willing and ready to undertake the project at the 300,000. So you also need to include this information that competitor is willing to take the project. If they don't accept it, what will happen? Not only that, this company is operating above break-even points. you are told that the company is currently operating above break-even point, which means that the company is profitable. So in that case, you also need to include that. All right. You also need to include it in your report. So these are the information that examiner is expected you to incorporate in that report. So quickly, let's finish it up. So you can then say, if you like, you can say, uh, um, refer to our last discussion on Project X, or you can say consistent with our last discussion, whatever. So your skill or your experience in report writing, we determine how much marks you are going to earn in this particular requirement, because we are not the same. All right. If I want, I can write the report now. If I want to do it next time, it will not be the same thing. So whatever that comes to my mind and consistent with the question is what I'm going to put down. So we are better than one another in terms of report writing. Some students can even do better than any lecturer in terms of report writing. So because we are good, our grammatical construction and all of that differ. Okay, so all of this you need to you need to bring them to bear when you are writing your report. So I can say consistent. Get out. For good. Okay, consistent with our last discussion on Project X. Okay, consistent with our last discussion on Project X, the financial and economic viability of the projects has been ascertained using relevant costing. Okay, you can say using relevant costing or using relevant cost for decision making. All right. So in this introduction, I have informed the management that, okay, the assignment you gave to me based on our last discussion, I have reviewed and I have also evaluated it. And I have used relevant costing. Okay. The person you are writing the report to does not know anything about relevant costing. So first thing first, you need to explain what is relevant costing. All right. So I can then say, for this purpose, or you can just say relevant costs are costs that are directly attributable to a particular course of action, as a direct consequence of the decision taken. Okay. They are the costs that will be incurred for the purpose of executing Project X. All right. So I've explained what relevant costs are, and at the same time, I've let the management understand that, okay, these relevant costs are costs that will influence Project X. Okay, they are the costs that we are going to incur because of Project X. So you can then go back to the third paragraph to then mention that your analysis in Appendix A above show a relevant cost of 180,000 naira. This means that the project is financially viable, considering the fact that we are currently operating above break-even points. Okay? Then you then begin to talk about you then advise that the company should accept the project at 300,000 naira, which will enable the company to make additional profit of 120,000 naira. And that's bearing in mind that our competitor is willing to accept the offering price. Okay, because if the company fails to accept it, if your competitor get the order from the overseas customer, a bigger opportunity may come tomorrow whereby the company will lose it, because if the company refuses to take this, our competitor will take over the project. And if better opportunity comes tomorrow, it will elude the company. It will go to your competitor. All right. So these are the things examiner is asking you. Just key points, not too much of stories. Okay. So the calculation or the evaluation, you call it calculation or evaluation. The calculation in A above, the calculation in A above, let me put it in brackets. You can say A above or appendix A. All right, in A above shows a total relevant cost of 180,000 naira. This means that the projects will be profitable. This means that the project will be profitable. Therefore, the projects, therefore project X should be accepted at the offering price of 300,000 naira. At the offering price of 300,000 naira, okay, let me review that. The calculation above showed a total relevant cost of 180,000 naira. This means that the project will be profitable. Okay. Before that, let me remove that. I will write this one. The calculation will show a total relevant cost of 180,000 naira. Therefore, let me remove this. Therefore, project X should be accepted at the offering price of 300,000 naira. In order to earn a profit, additional, let me call it additional profits, or let me just leave it, a profit of 120,000 naira. Representing the difference between the contract price, represent the difference between the contract price of 300,000 and relevant costs of 180,000. Okay, so you can then come here to say you need to advise. Okay, we've already advised that the project should be accepted. So that's one. Then you also need to let the management understand that our competitor is willing to accept the project at the offering price. Let me put it this way. I can even add it. That paragraph is not too big. Okay. Bearing in mind that our competitor, so you have to internalize it, you have to personalize it. So you are speaking as if you are the employee of the company. That's why you are using our, so you are personalizing it. You are internalizing that you are part of the company. All right. So bearing in mind that our competitor, or you can say major competitor, or you can just say competitor, whichever one. Our major competitor is willing and ready to accept the offering price, to accept the projects, is willing and ready to accept the projects at the offering price. Okay. So that's that. So they can then say conclusion. Should you need further clarification or explanation? Further clarification, do not hesitate to contact me. All right, that's all. All what examiner is asking you here, you have already included in that report. You have to state whether the company should tender. We've already advised, stating the reason why. Why should they advise? Because it is profitable. All right. Then the price is 300,000. They should accept it at 300,000. Bearing in mind that competitor is prepared to undertake the project at the offering price. That's what we have done. That's what examiner is asking you to do. No need for too much of story. Okay. So in your conclusion, because you are writing to the management, when they are when the management is reading the letter, they may need one or two area of further explanation. And that's why you are saying here that should you need further clarification, do not hesitate to contact me. So that's all. You then come here, just write your name. You can say we have, in this class, we have, let me see your names. Let me see those with, that their names start with A's. Okay. Anthony is the only one here with A. Where are the A's? So I have Anthony, I have Chioma. I'm looking for another A. Okay, let me just write anyone. All right, let me write anyone. So we can then say, just write out your name. Zaza, okay. I'm looking for ABC. That's the kind of name I'm looking for. Sorry, ACA. All right. So you can say, how do? Let's do three. Let's do three in one. Wazobia. Okay. Let's do Audu. Your name is Audu Chioma Adiola. Yeah, that's three in one. You can then write ACA. You are an expert. You need to demonstrate, you need to show your designation. ACA, any other qualification you have. that can show that you're a professional. You can put it there. Qualification or designation like AP, PDP, APC, BRT, whatever you did, whatever your designation, just put it there to show that, okay, an expert is talking. All right. So you can then come here, management, accountants. All right. So no need for you to put in your signature. All right. When you are writing the reports, your memo reports in your exam, no need to put in your signature. However, in practice, when you are writing a report, you have to put your signature, particularly if the management you are sending the report to is not within your immediate environment. You know, there are some organizations, for example, multinational companies, whereby the head office is somewhere else. The subsidiary is in another country and all of that. So you are still within the same organization. The only thing is that the person writing the report and the person you are writing the report to are not within the same jurisdiction. Therefore, when in practice, when you are writing your internal memorandum, after reading the content just the way we have done, you have to put in your signature. It's not just about signature, all right? Let's say, for example, we are talking about a multinational company, right? So you are the one that prepared the report. Therefore, you are going to write in practice, let me put it there. So you are going to write the name of the preparer. You just say preparer, all right? You write your name. Anthony, whatever is your name, Anthony Shegun, Anthony Shegun, that's your name, right? You are not the only one because you are writing to the management, you are writing to the head office, right? So when you prepare it professionally, when you prepare a report, it is always better, no matter your level within the organization, except maybe you are the CEO. So when you prepare the report, right, even if you are the CEO, it's not the CEO that will write the report. It may be the admin or a designated person that will write the report for the CEO. The CEO will just review, right? So you are the preparer. So there must be somebody within the organization, maybe the person you are reporting to, or another person within the organization, maybe you are at the same level, right? Maybe line manager or whatever, that will also need to review, all right, to ensure that the grammatical construction of your report is adequate or okay. Then, of course, there may be more than one reviewers, okay? There may be more than one reviewers. So whatever the case may be, so you're also going to include the name of those reviewers, all right? People that have reviewed the report. You list their names. If there are more than one, you list their names, then each of them must sign. Then finally, the person that is the head of that particular subsidiary or branch of the company, all right, the person that is the head of that particular branch or subsidiary must endorse the report. He or she is not going to approve. The person that will approve is the person that have the final authority. All right. So you also need to have endorsements. Okay, endorse. Who endorsed the report? Of course, it has to be the head to show. This is to show that this report has been adequately prepared, reviewed, and also endorsed by the designated person within the organization. But if the head of you are working in the head office and you are the one preparing the report, of course you are going to have reviewers. There is no need for any endorser. So instead of endorser, it will then be approver. Okay, it will just be approver. Okay, then the name of the person that will approve it and all of that. So depending on the kind of report you are writing and what the intention or the purpose of that report. So this is what you need to do in practice. Each of them you write the name of the person that prepare it. The person will sign by his name, by his or her name. The reviewers will also write their name and then sign on it. Then everything. So when that is done, then you can then send the final report to the head office or to the management. This is what you do in practice. But for the purpose of the exam, no need to put any preparer, reviewer. Just write your name and then your title. That's all. No signature. Just leave it as that. So this is what you need to do to write your report. All right. So let me know if you have any question for me. If not, let's start a new question, a new illustration. Any question so far? Okay. So let's have another illustration. Let me remove this so that you don't think it's part of it's part of our solution. That will avoid the confusion. Okay, so let's have illustration number 2. Who is going to help us to read this, please? Who will help us to read? Yes, gift. Go ahead.
Clepatoni Limited. Good evening, sir.
Good evening.
Clepatoni Limited is a company that builds innovative and environmentally friendly housing. Their houses use high quality materials, and the unique patented energy saving technology used in the house has been the result of the company's own extensive research in the area. Clepatoni Limited is planning to expand into another country.
Hold on, gift.
Yes.
Hold on, gift. Please, I need every one of you to pay attention to the scenario. All those things we have discussed in the past, current purchase price, okay, scrap value, historical cost, labor cost, and all of that, how to identify relevant cost of material and labor. Pay attention to the dictate of the question so that you'll be able to see the way we are treating it. So go ahead, gift. Sorry for the disruption.
Okay. Clepatoni Limited is planning to expand into another country and has been asked by a prominent person in that country for a price quotation to build them a house. The board of directors believes that securing this contract will help to launch their houses in the country and have agreed to quote a price for the house that will exactly cover its relevant cost. The following information has been obtained in relation to the contract. The Chief Executive and Marketing Director recently met with the potential client to discuss the house. The meeting was held at a restaurant and Clepatoni Limited provided food and drinks at a cost of 37,500. 2. 1,200 kg of material Z will be required for the house. Clepatoni Limited currently has 550 kg of material Z in its inventory, purchased at a price of 5,800 per kg. Material Z is regularly used in its houses and has current replacement cost of 6,500 per kg. The resale value of the material Z in inventory is 3,500 per kg. 3. 400 hours of construction workers' time are required to build the house. Clepatoni Limited construction workers are paid an hourly rate of 2,200 under a guaranteed wage agreement and currently have spare capacity to build the house. The house will require 90 hours of the engineer's time. Clepatoni Limited engineers are paid a monthly salary of 475,000 each and do not have any spare capacity. In order to meet the engineering requirements for the house, Clepatoni Limited can choose one of the two options. I. Pay the engineers an overtime rate of 5,200 per hour to perform the additional work. II. Reduce the number of engineers' hours available for their existing job for the building of product Y. This would result in lost sales for products Y. Summary of the details of the existing job the engineers are working on. Information for 1 unit of product Y. Sales revenue 486,000. Variable cost 336,500. Engineer's time required per unit 30 hours. 5. A specialist machine would be required for 7 weeks for the house to be built. Clearpatoni Limited has 4 weeks remaining on the 15-week specialist machine rental contract that cost 1.5 M. The machine is currently not in use. The machine can be rented for an additional 15 weeks at a cost of 1,525,000. The specialist machine can only be rented in blocks of 15 weeks. Alternatively, a machine can be purchased for 16 million and sold after the work on the house has been completed for 14 million. 6. The windows required for the house have recently been developed by Clearpatoni Limited and use the latest environmentally friendly insulating material. They produce the windows at a cost of 3,495,000 and are currently the only ones of their type. They were planning to exhibit the windows at a house building conference. The windows would only be used for display purposes at the conference and would not be for sale to prospective clients. Clearpatoni Limited has had assurances from 3 separate clients that they would place an order for 25 windows each if they saw the technology demonstrated at the conference. The contribution from each window is 1,045,000. If the windows are used for the contract, Clearpatoni Limited would not be able to if the windows are used for the contract, Clearpatoni Limited would not be able to attend the conference. The conference organizers will charge a penalty fee of 150,000 for non-attendance by the company. The chief executive of Clearpatoni Limited can meet the clients directly and still secure the orders for the windows. The meetings would require 2 days of the chief executive time. The chief executive is paid an annual salary of 41,400,000 and contracted to work 260 days per year. The house to be built requires 400 kg of other materials. Clearpatoni Limited currently has none of these materials in its inventory. The current purchase price for these other materials is 600,000. Clearpatoni Limited fixed overhead absorption rate is 3,700 per construction work hour. 9. Clearpatoni Limited normal policy is to add 12% markup to the cost of each house. Required: produce a schedule that shows the minimum price that could be quoted for the contract to build the house. Your schedule should show the relevant cost of each of the 9 items identified above. You should also explain each relevant cost value you have included in your schedule and why any value you have excluded are not relevant. 21 marks. B. Explain 2 reasons why relevant costing may not be suitable approach to pricing houses in longer term for Clearpatoni Limited. 4 marks. C. Recommend with justification a pricing strategy for Clearpatoni Limited should use to price the innovative, environmentally friendly houses when they are launched in the new country. 5 marks. Total 30 marks.
Thank you very much, Gift. You can see this is a very voluminous question. And then, of course, you have to bring to bear your understanding of relevant costing principle. So you are expected to, the A requirements is to produce a schedule. Examiner is asking you to produce a schedule that shows the minimum price that could be quoted for the contract to build the house. You have to determine minimum price to be quoted for these contracts. All right. So if that is the case, what are you supposed to do? Right? So when you look at the first paragraph of the question, examiner has already told you that The board of directors believe that securing the contracts will help to launch their houses in the country and have agreed to quote a price for the house that will exactly cover its relevant cost. So, give and take. What the examiner is asking you to do is to calculate relevant cost for this project. Therefore, you want to determine relevant cost. What are you supposed to do? To answer this, you have to treat it case by case basis, scenario by scenario, from item number 1 up to item number 9. Okay, from item number 1 up to item number 9. How do you treat each of them? All right, so let's start. I will then come here. Solution. The name of this company is Clepatoni Limited. Okay, Clepatoni Limited is the name of the company. All right. So what do you want to do? I will then say calculating relevant. You can call it relevant costs or you call it minimum price. Okay, determining relevant costs or determining or calculating minimum price. Okay, that's what you want to do. This is requirement number A. Okay. Then let me introduce my table. What's wrong with you? So let me introduce my table. To do this, you are going to create about 2 or 3, 4 columns at a minimum, right? The last column will be for the last two will be for debit and credits. All right. Then here will be the description of the item description. Then if you like, you can introduce another column, which is going to be a serial number, because examiner has told you, you have to explain your treatment of each of the items you have above. Okay. All right. All right. So I can then come here. Let me reduce this. Where we have major work is on the description. That one will be longer. So yeah. All right. So let's go back to the question. The first item is you are told that the chief executive and marketing director recently met with a potential client to discuss the house. All right. The meeting was held at a restaurant and Clepatoni Limited provided food and drinks at a cost of 37,500 naira. So the company has incurred cost of food and drinks at 37,500. So this 37,500 naira, is it relevant or irrelevant? If you know it, raise your hand. 37,500, relevant or irrelevant? Yes, gift. Talk to me.
You say it's irrelevant, sir,
Why?
because it's like refreshment or PRA expenses. It's not directly related to
Remember,
the.
what did you say? It's not
I
directly.
said related to the house, to building of the
But
house.
look at the description. You are told that the chief executive and marketing director recently met with the potential clients. They met with a client. Why did they met? It's because of this. It's because of the project. So you are now told that they met at a restaurant and they eat and drink at a cost of 37,500. So the issue now is that this 37,500 is it relevant or irrelevant? Yes, Erima, talk to me.
It's an irrelevant cost and is a past cost, it's not a future cost.
It's a past cost. It's a sunk cost,
It's a small cost.
right?
Yes.
All right. So both Erima and then Gift are correct. Okay. So the reason why it is not relevant is because it's a sunk cost. The met is because of the project they met. However, that cost of 37,500 has already been incurred, therefore not relevant to the calculation. So if you like, you can then come here. You don't need to put it in your table. You don't need to put it in your table. That would be as part of your assumptions. So just ignore that. The 37,500 is irrelevant. So move on to the next one. Additional information number 2. 1,200 kilogram of material Z will be required for the house. So to build this house, the company is going to require 1,200 kilogram of material Z. Okay. Clepatoni Limited currently has 550 kilogram of material Z in its inventory purchase at a price of 5,800 naira per kilogram. Material Z is regularly used in its houses and has a current replacement cost of 6,500 naira per kilogram. The resale value of material Z in inventory is 3,500 naira per kilogram. So we have about 3 different costs here, or 4 different cash flow here. One is 3,500, another one is 6,500, then the third one is 5,800. Now, which of this information are we going to select? Examiner has told you that 1,200 kilogram of material Z will be needed for this project. However, the company currently has 550 kilogram in stock. So 550 kilogram is in stock. And this 550 kilogram was purchased at 5,500 naira. So let me start with this 5,500 naira per kilogram. Is it relevant or irrelevant? If you know it, raise your hand. Yes. Yes, Nancy, talk to me.
It's irrelevant, sir.
Why?
Okay, because the 550 kilogram is what they already have in store. And since they said they're having a replacement cost of 6,500, that's what we are going to use for it, sir. The replacement cost.
Okay. So I was expecting a particular terminology that you should use. This five, remember when I was explaining to you last week, we discussed current purchase price, we discussed historical cost, we also discussed disposal value. All the 3 of them are in this particular paragraph. Okay, they are all in this particular paragraph. I mentioned to you that historical costs represents the amount at which the item of inventory had in purchased previously. And I said that historical cost is a sunk cost and therefore not relevant. So this 5,800 naira was the amount spent, okay? Was the amount spent to purchase this material of 550 kilogram. So that 5,800 naira is a sunk cost or is an historical cost. It's a past cost. Any past cost is irrelevant cost. Therefore, this 5,800 is not relevant. We ignore it. I also mentioned that current purchase price is the amount at which the item of raw material or inventory can be purchased currently in the market. When you want to buy material, you go to the market. The price at which you are going to buy it is what is known as current purchase price. And I said that current purchase price is also known as replacement cost. Not only that, and I said that current purchase price or replacement cost should be used if it can be ascertained that the material is in frequent use, okay? The material is in frequent use and will be replaced. So examiner has already told you that material Z is regularly used in the houses and has current replacement cost of 6,500 naira. So anytime you are given current purchase price or replacement cost, that is the price that you are going to use. So in this case, I will then come and then determine my current purchase price. However, here you are given, your examiner has already told you that this 1,000 that is to produce, to build this house, 1,200 kilogram of material Z will be needed. So you are going to multiply 1,200 by 6,500 replacement cost. That's what you are going to do. The one you have in the warehouse, this 550 kilogram. It is assumed that you are not going to use it for this project. Therefore, the only option you have is to dispose it off. The material, you remember, you are told that this material, the material Z is regularly, once you are told the material is regularly used, so all you need to do is to just multiply the material that you need with the current purchase price. That's all you need to do. Whether you have it in store or not, forget about the one you have in store. So this one that the company has in store, which is 550 kilogram, will only be relevant if examiner told you that it will be disposed of. So the one you have in the warehouse, all you need to do is to sell it. That's a scrap value. That is disposal value. Okay, so you only sell it. But in this particular question, examiner told us that the resale value of the material Z in inventory is 3,500 naira per kilogram. You are only given resale value. You are not told that material Z will be disposed of. So it is only when you are told that this 550 kilogram will be sold or will be disposed of that you are going to recognize a saving as disposal value. So as far as this question is concerned, this 3,500 naira is irrelevant. Just ignore it. It's not a saving because you are not told that the 550 kilogram of material Z in inventory will be disposed of. It is, remember when I was explaining disposal value, I said disposal value, also known as scrap value, is the amount at which the item held in the inventory can be disposed of. And I also mentioned that disposal value represents a saving to an organization. Therefore, scrap value or disposal value should be considered if it can be ascertained that the material is no longer needed and will be disposed of. So in this question, we are not told this 550 kilogram will be disposed of, and that is why you are not going to recognize any saving. That information is just there until you are told that. So we don't need it. We are not going to dispose it off. So that's that. So I will then come here. Material Z. Material Z. So we need 1,200 kilogram. And we told that this 1,200 kilogram will be purchased at 6,500 naira. Somebody should give it to me. Don't let me ask you. Yes, Shola, what's your question? You raised hand.
Good evening, sir.
Yeah, good evening.
Still on the you've screwed up. I don't. Okay.
Yeah.
The still go. The 1,200 naira kg. I mean 1,200 kg, and that of 550 kg. So I was just thinking like a typical Nigerian who has been using material maybe to build at site. So I was thinking that okay, if I'm planning a project and I will need 1,200 kg of a particular material to be used, and I have 550 on ground already, why can't I just deduct the 550 from that 1,200 kg? Then to now be looking for the balance. I was just thinking that. Anyway.
Yes, yes, yes. You have a valid point, and your concern is correct. Ordinarily, an average student will just say 1,200 minus 550. That means you only need to buy 650. Bear in mind that you need to determine the total cost you are going to incur on this project. So you are not using 650 for this project. You are going to use 1,200. However, this 550 kilogram will only be useful if examiner has mentioned that the 550 will be used for this project. You are not told in this particular instance that the 550 kilogram will be used for this to build this house. So if you are told that, if examiner has told you that this 550, the material you have in the warehouse or in store will be used for the project, it's not going to be for free. It's not going to be 1,200 minus 550. All right. So you are still going to cost it. However, this 550 will then become opportunity cost. If you are going to use this 550 kilogram for the project, so it will now be at opportunity cost, because if you want to sell the 550, you know how much you are going to earn. But because you are not going to sell it, because you want to use it for the project, you will not be able to earn it. You will not be able to sell it again. That will become opportunity cost. But examiner did not tell you that they are going to use the 550 kilogram for the project. And that is why examiner has mentioned to you that the material Z is regularly used. So when you are told regularly used or infrequent use, it means that you are going to buy the entire material needed in the market. You are going to buy it afresh. So forget about the old one you have in the warehouse or in the store. So you only consider the one you have in the store if you are told that it will be used. It will be used for the project. But in this particular question, examiner did not tell us that are going to use it for the project. Therefore, forget about the 550 kilogram. Don't include it. Because what you just mentioned now, Shola, what you just mentioned now is what an average student will do. In fact, majority of the students will treat it that way. Maybe we have 1,200 in the warehouse. I mean, out of the 1,200 kilogram needed, 550 is in the warehouse. Therefore, only 650 will be bought. Then 650 kilogram multiplied by 6,500. That's it. When you do that, you are going to get it wrong, because examiner did not tell you that they are going to use the material head in store. They are going to use it for the project. It is only when you are told it to be used for the project, then you are going to consider it. So in that case, it will then be 1,200 minus 550, which is 650. So 650 kilogram multiplied by 6,500, that's number one, plus 550, okay, 550 at whatever the price has given to you. If you are not given a separate number, then it will be at the historical cost. It will be at the it will be at the disposal value. Whatever the amount will surely be given to you. If they want to sell, if they want to, it's as if they want to sell it for the project, even though you are the one that is the company that has the material. But because you are going to use it for the you have to cost it, because you have purchased it before. You are not using your historical cost, but the price given to you for the 550, another price given to you is what you are going to use in this case. All right, so that's how you are going to trade that. I hope it's clear now. Shola?
All right, sir. Thank you, sir.
Yeah, so Nancy, talk to me quickly.
Sir, although the question did not say that the material is being disposed, but assuming that we come across a question whereby they said the material is being disposed. How then do we treat it with this 3,500 per kg, for example, sir?
I've told you to be disposed of. Well, if you are told to be disposed of, you have to recognize it's saving. All right? So don't worry as you proceed. Maybe you saw the way we treated it last time. Look at the way we treated it last time. 17,500. It's a saving under the first question that we solved. Okay, Nancy?
Yes, sir.
All right, then. So let's move on. So what do you have? What's the final answer? 1,200 multiplied by 6.5. What do you get?
7.8.
7.8. Let's move faster. So that's that. I will then move to the next one. There is no even need for me to include the serial number. I don't need serial number for anything. Just let me ignore that. It's a waste of time. Okay, so let's move on. Item number 3. So for each of them, you have to state your assumptions. Then number 3, 400 hours of construction workers are required to build the house. Clepatoni Limited construction workers are paid an hourly rate of 2,200 naira under a guaranteed wage agreement and currently have a spare capacity to build the house. So, how do we treat this information? 2,200 naira, relevant or irrelevant? If you know, you raise your hand. So, yes, Nancy, talk to me.
So I would say that it's irrelevant because there is an idle time there. There's spare capacity. And when you were explaining earlier, you said that idle time, relevant cost of labor will be 0. So that's why I said it to be irrelevant.
Yeah, you are correct. So when there's spare capacity, when there's idle time, relevant cost of labor is equal to 0. Nothing will be charged. Okay, you are not going to charge anything because the construction workers are idle. They have spare capacity. So that information, we are not going to charge anything there. We ignore it. Number 4, the house will require 19 hours of the engineer's time. Clepatoni Limited engineers are paid a monthly salary of 475,000 naira each and do not have any spare capacity. So this simply means that the engineers are working at full capacity. All right. And remember, full capacity are employees on a monthly salary. Therefore, the salary paid to those category of workers are fixed in nature, which means that it's irrelevant. So the salary paid to the workers is irrelevant. Okay, so in this particular question, this 475,000 naira is irrelevant cost because it's a fixed cost. Now, in order to meet the engineering requirement for the house, Clepatoni Limited can choose one of 2 options. So we have 2 options here. Option number 1, pay the engineers an overtime rate of 5,200 naira per hour to perform additional work. Therefore, I will then come here. Engineers time. Okay, engineers time. Select, or just say the lower of. Remember, there's an option here. The first option is to pay overtime. Of 5,200 naira per hour, and they are going to work for 90 hours. Therefore, I will then come here. Option number 1, overtime. So they are going to work for 90 hours. At what rate? 5,200 naira. So give it to me. What do you have? Yes. Let's move faster.
486. 468,000.
468,000. So you close this one. Remember that we have two options. Okay, you have two options. Option number one is to pay over time. Then option number two. Let's go back. Option number two, reduce. You have to reduce the number of engineers hours available for their existing job for the building of product Y. This will result in lost sales of product Y. Okay? Summary details of the existing job the engineers are working on. Information for 1 unit of product Y. So, if you reduce the hours of the existing job, currently they are using 30 hours. They are spending 30 hours to produce product Y. And the sales value for product Y is 486,000. Variable cost on product Y is 336,500 naira. So what that means is that since we are told in the question that it will result in a loss of sales, that means there will be contribution loss. Why? Because difference between sales and variable cost represents contribution. So if the company reduce the times the engineer spend to produce product Y, it will result in contribution loss. Therefore, what are you supposed to do? The first thing first that you need to do is to determine contribution per hour. You need to determine contribution per hour. That is 486,000 minus 336,500 divided by 30 hours. That will give you contribution per hour. Once you have the contribution per hour, you can then multiply with the total hours required by the engineers, which is 90 hours. That's what you are going to do. Therefore, I will then come here. The second one is contribution loss. You can call it contribution loss. That's the most appropriate. So, which is, we have 486,000 minus variable cost of 336,500. All right. Then divided by hour per unit, which is 30 hours. Okay, which is 30 hours. So this will then give us contribution per hour. You then multiply everything by the hours required on this project, which is 90 hours. Okay, so this will then give us the total contribution loss. Let me push this to the front. So give it to me. What do you have here? Yes.
448,500.
448.
500.
500. So you then take either of the two. Which one is lower? 448,500 is lower, isn't it? So that will be 448,500 because we are selecting the lower of 448,500. We are selecting the lower of 468,000 or 448,500. So that's all you need to do. Okay, so that's that. Next, we go back to additional information about 5. You are told that a specialist machine will be required for 7 weeks for the house to be built. Clepatoni Limited has 4 weeks remaining on the 15-week specialist machine rental contract that cost 1.5 million naira. The machine is currently not in use. The machine can be rented for an additional 15 weeks at a cost of 1,525,000 naira. The specialist machine can only be rented in blocks of 15 weeks. Alternatively, a machine can be purchased for 16 million naira and sold after the work on the house has been completed for 14 million naira. So how do we treat this information? If you know it, raise your hand. How do we treat it? Yes, quickly. How do we treat the information? A specialist machine will be required for these projects. And the company currently has a 4 weeks remaining on the existing contracts that was rented at 1,500,000. They are also told that the company can rent additional 15 weeks for 1525. Okay, 1,525,000. So how do we treat this information? Quickly. Okay. Now, this is what you are going to do. Since nobody is trying to want to attempt it, this is what you are going to do. Yeah, Cynthia, talk to me. Cynthia, you raise
Okay,
hand.
sorry, sir. Yes. Good evening, sir. So,
Yeah, good evening.
I would say it's a relevant cost because they actually need the machine. They would have to rent it again. Instead of they'll have to rent it again to cover for the 15 weeks since the 7 weeks is almost done. So I'll say is a relevant cost and they should go ahead and rent it at
Which one?
1,500,000. 1,525,000.
What about 1,500,000? What happened to that?
That one is a past cost.
Okay.
Yes.
It's a committed cost. It's a committed cost because you are told that the company already have an existing contracts. Okay, and this existing contracts remains 4 weeks of the machine out of the 15 weeks. So only 4 weeks are left. And the company rented it at 1,500,000. So that 1,500,000 is a committed cost. Any contracts is a committed cost, like lease. Okay, so that 1,500,000 is irrelevant. However, because you are told that the machine can only be rented for 15 weeks, block of 15 weeks. So the balance that the company has, that 4 weeks, is irrelevant for anything. We don't need it for anything. So you ignore. So the relevant cost here will then be 1,525,000, as mentioned by Cynthia. Also, you are told that alternatively, the machine can be purchased for 16 million naira and sold for 14 million naira when the job is completed. Therefore, in this case, you are going to compare 1,525,000 if the machine is rented additionally, or the company should purchase the machine outrightly for 16 million. And then after the project has been completed, it will be disposed of for 14 million, which means that the actual cost the company incur will then be 2 million. So you then compare 2 million with 1,525,000. That's all you need to do. So come here. Specialist machine. Specialist machine. All right. Again, it said the lower of, because we have option anywhere you have alternative. So you need to indicate that the lower of. So I can then come here. All right. Let me bold this one. Number one, option number one is additional rental. Additional rental costs. How much is that? 1,525,000. You then compare this with option two. Option two is to purchase. It chose to purchase the machine at 16 million naira and then dispose it off for 14 million naira. So let's determine net purchase price. Net purchase price. So under this, we are going to have the purchase price. Okay, we have purchase price of how much? We have purchase price of 16 million naira. Then, of course, we also have disposal value. The disposal value, according to the question, is 14 million naira. So the difference between the two is 2 million. Okay. Difference of 2 million. Let me underline this. So 2 million. We then compare this 2 million with 1,525,000. So anyone that is lower is what we are going to select. So 1,525,000 naira is lower. I would then say 1,525,000. That's all. See the way we are picking it. That's what the examiner is expected of you. No magic. Just understand the concepts. Okay. Next item. Item number 6. The windows required for the house have recently been developed by Clepatoni Limited and use the latest environmentally friendly insulating material. They produce the windows at a cost of 3,495,000 naira and are currently the only ones of their type. So this 3,495,000 naira is irrelevant because it's a sunk cost. They were planning to exhibit the windows at a house building conference. The windows would only be used for display purposes at the conference and will not be for sale to prospective clients. Clepatoni Limited has had assurances from 3 separate clients that they will place an order for 25 windows each if they saw the technology demonstrated at the conference. The contribution from each window is 1,045,000 naira. If the windows are used for the contracts, Clepatoni Limited will not be able to attend the conference. The conference organizer will charge a penalty fee of 150,000 naira for non-attendance by the company. Okay, so let's treat this information. You are told that if the windows that have been produced are displayed at the conference, then some customers are willing to, 3 different customers are willing to buy 25 windows each. That means 75 windows will be bought. At a contribution, the company will earn a contribution of 1,045,000. However, we need to establish from this particular paragraph, is the company going to attend the conference? No. The company will not attend the conference. Why? Because they are working on this project. They are working on this project, so they cannot attend the conference. It's not, the examiner did not tell you they are going to attend the conference. However, if the company fails to attend the conference, there will be a penalty fee of 150,000 naira. That is relevant. We need to consider that. Again, in the question, you are told that the company, the chief executive of the company, can still meet the clients directly and secure the order for the windows. That means this 1,045,000 naira is not lost. Irrespective, what this simply means is that whether the company attend the conference or not, they can still secure these contracts. They can still sell to the clients that are the three different clients. So that means the contribution of 1,045,000 naira is not lost. But if you are told in the question that they are not going to, they can't get those customers because they are angry since they could not see the window being displayed at the conference, then they left. In that case, the company is going to lose that 1,045,000. Why did the company lose it? Because of this project. Therefore, it should be that will be contribution loss. It will be part of the cost of this project. But because you are told that the company can still secure these contracts, they can still meet the clients directly and still secure the orders for the three windows. Then, I mean, for the windows, is that contribution of 1,045,000 is irrelevant. It's not lost. So just ignore it. The only relevant cost in this paragraph is the penalty fee of 150,000. So I will then come here, windows. I will come here, windows, penalty fee. How much is that? 150,000. That's it. Next item. We go back again, still on the same paragraph. You're also told that the meetings will require 2 days of the chief executive's time. The chief executive is paid an annual salary of 41,400,000 naira and contracted to work for 260 days per year. Of course, that information is irrelevant. The salary paid to the chief executive is a fixed cost. Any fixed cost is irrelevant cost, so you have to ignore it. All right, so that's not relevant. Next item. The house to be built require 400 kilograms of other materials. Clepatoni Limited currently has none of these materials in warehouse. The total current purchase price for these other materials is 600,000. So how do we treat this information? Number 7. Yes, other materials. How do we treat it? Okay, because of time. Yes, Cynthia, talk to me.
Okay, so we're going to it's a relevant cost because it's a current cost.
Okay, it is relevant. We are told that the material 400 kilograms will be needed for the project, and it is not in the warehouse. It's not in store, so the company will need to go to the market and buy. At what price? 600,000. So the entire 400 kilogram of the other material will be purchased for 600,000. It is not 600,000 multiplied by 400. No, the entire 400 kilogram will be purchased for 600,000. But if you are told that 600,000 naira per kilogram, then you can then multiply 600,000 by 400. But as it is, the entire cost of the other material is 600,000. Okay. Other materials, 600,000. Next, you can see performance management is sweet. It's very sweet if you know the concepts, if you understand the concepts. Next item, Clepartoni Limited fixed overhead absorption rate is 3,700 naira per construction worker hours. So this 3,700 naira, relevant or irrelevant? Talk to me. How do we treat it? Yes. How do we treat it? 3,700 naira? Relevant or irrelevant? Okay. Because of time. Yes. The fixed overhead absorption rate, this is just fixed cost per unit. You then multiply with the construction workers. We don't need it for anything. It's irrelevant. That cost will be incurred irrespective of the decision taken on the project. So any cost that will not change as a direct consequence of the decision taken are irrelevant. So this 3,700 naira is irrelevant. You ignore. Item number 9, Clepartoni Limited. Normal policy. Clepartoni Limited's normal policy is to add 12% markup to the cost of each project. Percentage markup is a profit on cost, okay? When you want to determine profit on cost, that is called markup. When you want to determine profit on revenue or on sale, that is called margin, right? So this 12%, is it relevant or irrelevant? Profit of 12% on cost, relevant or irrelevant? If you know it, raise your hand. How do we treat it? Yes. Or am I on my own? Speak to me, talk to me. Relevant or irrelevant? If you know it, raise your hand.
The 12% markup is relevant because that's the profit on the cost of the house. That's their profit that they will make after selling the house.
Okay, who is speaking? What's the name? Zoom user. What's your real name?
My name is Mopelola.
Mopelola. I always forget. All right then. So you said that the 12% is relevant because that's the profit they are going to earn on the project. Okay. Then, Shola, talk to me. Relevant or irrelevant?
It's relevant, sir. The
Why?
only thing I want to say that is different from the last speaker is that, so since markup is on cost, so
Yeah.
and we are looking at all this while we have been looking at cost. We are looking at relevant cost. So it's on cost, not like, okay, profit. So I don't know, maybe I'm wrong
It's all
anyway.
right. Sorry. Eriman, talk to me. You raise hand too?
I think it's irrelevant because it's not actually a cost incurred on executing the project or building the house. I think it's irrelevant.
Okay. Okay. Is it no, this is a cost. I mean, this is a profit.
Yeah,
Markup
it's
is
a
a
profit. It's
profit
a
on
profit.
cost. So relevant or irrelevant?
I think it's irrelevant, sir.
Okay. Nancy, you are the last person. Relevant or
Sir,
irrelevant?
I would say that since they said it is Clepartoni Limited normal policy to add 12% markup to the cost of each house, then I would say that it is like an unavoidable cost. So to me, is irrelevant.
Okay. So all of you is not you're on the same page. You are in the same school of thought. All right. So we are told that the company's normal policy is to add 12% markup to the cost of the house. So what that simply means is that you need to first of all determine the total cost. You then add 12% to it. Then whatever you are, that will then the addition of the profit plus the cost is the total cost that you are going to incur. Okay, you are going to charge. That will be the contract price you are going to charge the customer or the client. In this particular question, you have to be very careful. You must be very careful. At times, examiner will put you to express, knowing that at the end of that express is a pit, a very deep pit, which you are going to enter. You will not be able to come out again. Examiner has put you to express. So don't follow. You have to be very careful. Know what you are doing. It was expressly stated in this question that the company intends to quote a price that will exactly cover its relevant costs. The company is not willing to make any profits. Pay attention to this scenario. You are told that Clepatoni Limited is planning to expand into another country and has been asked by a prominent person in that country for a price quotation to build them a house. The board of directors believes that securing the contracts will help to launch their houses in the country and have agreed to quote a price for the house that will exactly cover its relevant cost. And that is why the examiner is asking you to produce a schedule that shows the minimum price that could be quoted for the contract to build the house. So the intention of the management of Clepatoni is to quote a price that will exactly cover its relevant cost. So what you are preparing is relevant cost. You are not determining contract price. Only when you want to determine contract price, the amount you are going to charge a customer, then you can include the markup to the total cost to then have the total contract price. So as far as this question is concerned, if you include the profit markup of 12%, you are going to get it wrong. You are going to get it wrong. Even though if you include it, examiner will just mark you wrong for that particular line item. If you get most of the line item correctly, that is, you are going to pass it. But the bottom line is that please, going forward, you will only consider profit markup if the question requires that you should do it. Other than that, you don't put markup. In this particular question, what the examiner wants you to calculate is relevant cost. You want to determine the cost. You are not have to determine the contract price. When you include profit to your cost, that means you are selling, you want to determine your contract price. That is the amount you want, the minimum you can collect from that particular customer. But here you are told you should determine a price that will equal the relevant cost. So this markup is irrelevant. You ignore it. That is that. Then that's end of it. Let's determine our total cost. I can then come here, total. Let me come to the other side, cost of space. So total relevant cost. So somebody should add everything together for me. Add it up. Yes, what do you have? What's the total? Let me use my calculator. No time.
10 million.
Okay.
10 million
380.
10 million what?
$10,523,500.
523,500. That's it. That's the total relevant cost. So I'll go back to the question in the requirements. You have to produce a schedule that shows the minimum price that could be quoted for the contract to build the house. your schedule should show relevant costs. You can see now examiner is still emphasizing on relevant costs. You should also explain each relevant cost value you have included in your calculation. You can never hand these 21 marks. Okay, you can never hand the 21 marks. If this is where if you stop at 10,523,500 naira, if you stop there without explaining your assumptions, you can never earn your full mark. Therefore, I will then come here. Assumptions. The calculation above is based on the following assumptions. Then begin to explain each of them. Number one, food and drink. So what's our assumption on food and drinks? We said that the food and drinks of 37,500 naira is irrelevant because it's a sunk cost. So you can then say the cost incurred on food and drinks of 37,500 naira. It's a sunk cost and not relevant to the calculation. That's all. Number two, we go back again. Let's go and identify the number two bullet points. We are told that 1,200 kilograms of material Z will be required for the house. Please pay attention to this. Anytime you are stating your assumption, like I mentioned previously, it's not something you are going to fabricate. The information is there in the question. Just go to each paragraph. How did you treat it? That's what the examiner is asking you. How did you treat each figures given to you in the question? Just explain it. That's all. So that's why no student should fail question on relevant costing. If you know what you are, no student should fail it. Because even the assumption alone, you can earn so much. Not to talk about the calculation. If you get most of the line items of the calculation correctly, you are going to pass it, irrespective of your final answer. If you now get the final answer correctly, then that means you are close to 100% passing it. But for you to be able to do this, you must understand the concept. Move on from here. So we are told we treated this item number two. The 5,800 naira we said is a sunk cost, is an historical cost. We ignore it. We only use the 6,500 being the replacement cost. Also, the 3,500 naira disposal value, we ignore it because we are not told that the material will be disposed of. So let's state our assumption on that. Material Z. Okay. The cost of material Z of 5,800 naira per kilogram is a sunk cost. It's a sunk or historical cost and not relevant to the calculation. Only the current purchase price. Only the current purchase price of 6,500 naira per kilogram is included is included for the entire for the entire 1,200 kilogram needed. Okay. However, it's not compulsory when you are stating you do it the way I'm doing it. No, it's included. However, the disposal value, the disposal value of 3,000, is it 3,500 per kilogram? Is not relevant, is irrelevant. Since it is not indicated that the material held in store, held in inventory, the material, the 550 kilogram, of material held in inventory will be disposed of, So because we are not told it to be disposed, so that's why we ignore it. All right, so dispose. So that's that. We are done with that. Let me board it. Next. Item number 3. 400 hours of construction workers' time. Okay, we have construction workers' time. What did we do here? We said that the 2,200 naira is irrelevant because there is spare capacity. And when there is spare capacity, relevant cost of labor is equal to 0. So construction workers' time. Okay. Construction workers' time. Number 3. Construction workers' time. All right. The current wage. Of 2,200 naira for construction workers. For construction workers is irrelevant since the workers have spare capacity. Okay, since the workers have spare capacity. No need to talk too much. Okay, number 4. The house will require 90 hours. So our treatment here, because of time, our treatment here is that we consider 2 options. Okay, before that, we are given a monthly salary for the engineers. Okay, for engineers' time, we are given monthly salary of 475,000 naira, and we said that is not relevant. We ignore it. We then take the lower of overtime of 5,200 per hour, and also the contribution loss. Okay, and the contribution loss. So let's state that. Engineer's time. Okay. The salary the salary, let me put it this way. The engineer's salary, of 475,000 naira is a fixed cost and not relevant to the calculation. Full stop. The only relevant costs associated with the engineer's time, is the lower of overtime cost of, how much is that? Overtime cost of 5,200 naira per hour, 5,200 naira per hour at a total cost of 468,000, or a total contribution loss of 440 watts, 448,500 naira. Okay, so that is our treatment of the engineer's time. Number 5, we have specialist machine, and under the specialist machine, we said that the 1.5 million naira is a committed cost and not relevant to the calculation. However, the lower of additional weekly rentals of 1,525,000, or the net purchase price of the machine of 2 million naira is what is taken. Okay, so let's state that specialist machine. Specialist machine. The rental cost of the specialist machine, the rental cost of 1,500,000 for the specialist machine is a committed cost. And not relevant, and therefore not relevant for the projects, or not relevant for the calculation, not relevant for the calculation. However, the lower of the rental costs, additional rental costs of 1,525,000 naira, or the net purchase price of 2 million naira has been included in the calculation. So that's that. See the way we are picking it one by one. Next item, number 6, is the longest paragraph. Okay, in this number 6, we said that the company produced the window at a cost of 495,000 naira. And we said that's a sunk cost. We ignore it. All right. We also said that the only relevant cost is the penalty fee of 150,000 naira. The contribution of 1,045,000 naira is not lost since the company will still secure the contracts. Then finally, the executive annual salary of 41,400,000 is a fixed cost, not relevant to the calculation. So let's state that. So next, window cost. Window cost. The window costs of 3,945,000. Let me confirm. Yes, no, 495, 3,495. 495 is irrelevant because it's a sunk cost. The contribution also, the contribution of 1,045,000 naira is irrelevant since the company can still meet with a customer or with a client, can still meet with a client, and secure the order. Okay, also the contribution of is irrelevant since the company can still meet with a client and secure the orders. Okay. Then, of course, the only relevant costs is the penalty fee of 150,000 naira. Since the company will not be attending the conference, Okay. The chief executive salary of 41,500,000 400,000 naira will be incurred irrespective of the decision taken on the house projects. That's that. No need for too much. Okay, so that's our treatment of that particular item. Next. Number 7, the house to be built require 400 kilograms of other materials. Okay, and the current purchase price is 600,000. We have used that 600,000 because it is relevant. So other material. Number 7, other materials. Since other material needed for the house is not available, the 600,000 naira for the 400 kilogram is relevant and included in the calculation. See the way we are doing it. That's what is expected of you. It's not compulsory. You have to construct your sentence the way I'm doing it. But what is important is that you just have to comment on each on the way, or provide justification on the way you have treated each line item. That's what the examiner is asking. It's not compulsory that you have to do it the way I'm doing it. All right. So this is just a guide. Number 8. Item number 8. Clepatoni Limited fixed overhead absorption rate is 3,700 naira per construction worker hours. So we have fixed overhead absorption. Okay. And we said that is not relevant. Fixed overhead. Okay. Fixed overhead absorption. This will be incurred. This will be incurred whether or not the house projects is undertaking or not, whether or not the house project is undertaken. Therefore, it is not therefore the 3,000 3,700 naira. Is it per hour? Let me check. Yes. The 3,700 naira per construction worker hour. Per construction worker hour is not relevant. Okay, that's it. That's the last one is profit markup. Okay, we have a markup of 12%. Then come here, markup. the profit markup of 12% on the total relevant cost is not relevant or is irrelevant. Let me just, yeah, is irrelevant. Irrelevant. Since the intention of the board of directors of the board of directors of Clepatoni Limited is to quote a price that will cover its relevant cost. Okay, that is why we ignored the 12% markup. Okay, that's it. This is what examiner is asking you. It is until you do this, you are going to earn your 12 marks. Look at how big is that question. Look at our calculation. Just look at how small is our calculation. All right. So, and then compare your efforts in this calculation relative to the assumptions that you have written. And that's why in most cases, assumption carries more mark than the calculation that you think that you have done. All right. So that is this is how to treat requirement number A. Requirement number B. Examiner is asking you, okay? Let me check. I've been the only one talking since. Some of you have disappeared. No worries. Yes. Can you guys say hi to me? I want to know if you are still here with me.
Hi.
You're actively
Hi.
all right.
Hi,
Yeah,
sir.
thank
Hi.
you. Yeah, thank you.
Hi.
So, yeah, in the B part of the question, kindly check number 8, sir. What is number 8? Let me check. Fixed over, this will be incurred whether or not the house project is undertaken. Therefore, the 3,000 per concerned worker is not relevant. Okay, maybe you are trying to, what's the name of that person again? Doesn't send you the charts. Let me see. Well, where you have undertaking. So speak up, Shola. Let me know exactly what is wrong in that. Let me see. Number 8. Yeah. This will be incurred whether or not the house project is undertaken. What's the issue there? I think it should be undertaken. Because we are using is. We are using is. So what should follow is ing instead of en. You know, I didn't go to grammar school, so I'm not really good in grammar. Shola, so you say this one should be undertaking like this. Is that what you mean? Talk to me, Shola. Use the mic. Shola. Okay, Cynthia, talk to me. Oh, you can't speak now. Okay, no
Okay,
worries.
sir.
Yes,
I have
Cynthia,
a question.
what's your question?
The number 7, other materials. I'm
Yes,
actually that's kg. It's 400 kg. If I sit in the
yeah.
exam, I might end up multiplying it with the the available material, which is the 600,
You're on
the
your own
current.
now.
Sir, please, can you
You'll
explain
be
more?
I've explained it now. Maybe I told you when I was treating that information. I said examiner has told you that the other material is not in the inventory and it will be needed. So they've purchased 400 kilogram at 600,000. I also mentioned that, but if you are told it is 400,000 or 600,000 naira per kilogram, then you can multiply 600,000 by 400. So as it is now, the entire 400 kilogram is purchased at 600,000 naira. That's what the examiner told you. Look at the information here. You are told that the house to be built require 400 kilogram of other materials. Clepatoni Limited currently has none of these materials in inventory. The total current purchase price, look at it. Total current purchase price for this other material is 600,000. So the entire 400 kilogram is purchased for 600,000. But if you are told that the 400 kilogram is 600,000 naira per kilogram, then in that case, if they mention per kilogram, you can then multiply with 400,000. So these are the little mistakes that students do make when answering questions. So you have to don't be in a rush. You must understand what the question is telling you to do. All right. So that's Cynthia. I hope that is clear.
Yes, thank you, sir.
You are welcome. Okay. So, Frank has also answered you on that. All right. So that is requirement number A, 21 marks. You pocket it, put it in your pocket. You are looking for 79 to go, to earn your excellence. Okay. So number B part of the question, you have to explain 2 reasons why relevant costing may not be a suitable approach to pricing houses in longer term for Clepatoni Limited. So many issues are in this particular number B requirements, because you can see in the question, the examiner has told you that Clepatoni Limited is a company that builds innovative and environmentally friendly housing. Their houses use high quality material and unique patented energy saving technologies. All right. Thank God Mr. Shiwaju has taught you pricing decision. All right. So you know the kind of the pricing strategy a company that can adopt, or pricing method. We have part of it is a penetrative pricing. We have skimming, different kinds of, you have cost plus, different kinds of pricing strategy that can be adopted. However, when you look at this question, examiner has told you that this window, or the company use high quality material with a unique patented energy saving technology. Okay, so that means this company has a differentiated differentiated kind of product that is very unique. It's not the same. It's uncomparable in the market. So examiner is now asking you, what is the pricing? Okay, what is the price? Let me go back. Explain 2 reasons. Okay, explain 2 reasons why relevant costing may not be suitable for this. May not be a suitable approach to pricing houses in longer term for Clepatoni. You have this kind of technology embedded in your housing, and then you are charging cost that will be equal to your relevant cost. That will only cover your relevant cost. When you charge price that will only cover your relevant cost, it means that the company wants to break even, no profits. And if there is no profit, there will be no motivation. The company requires funds to expand in another country. If the investors are aware of the fact that you are not profitable, they are not going to put in their money They will not fund your project. They will not fund your investment. That's one. That's one of the reasons. Okay, so not only that, relevant costs will not be suitable for the company to charge. I mean, to as a good approach to price their housing, to price their houses, because it will not be, the company will not be able to make sufficient profits to enhance shareholders' equity value. The primary purpose of any business organization is to make profits. For any business is to make profits. When you're able to make profit, that means the company will be able to create value for the owners. So if you are quoting prices, or if you are quoting price that will make you to break even, in that case, you will not be able to you will not be able to achieve your primary objective, which is to maximize shareholders' equity value or shareholders' worth. And that is why relevant cost is not a suitable approach for pricing houses in the longer term. Yes, it is a one-off thing. You are just new in that particular country. You can quote, you can break even, but that will be in a short term. In the long run, you have to begin to find a means of ensuring that you are profitable, because if you are not profitable, the business will collapse. Yeah, because there is no motivation for the shareholders to keep on spending money or contributing their capital into the business. Okay, so that is why it is not suitable. Examiner is now asking you in the C part. I'm still going to show you in the golden book how I treated the B part. Then in the C part of the question, you are to recommend with justification a pricing strategy for Clepatoni Limited should use to price the innovative, environmentally friendly houses when they are launched in the new country. So what should be our pricing strategy that the company should adopt? Because you guys have done pricing decision, Mr. Ashwajola has taught you pricing decision. So the best approach, the best strategy to use is for the company to adopt a scheme pricing. Now, scheme pricing is used when you have a differentiated, unique product in the market. Like, for example, you will remember, for those of you that were still around, that was around when the telecommunication company came into Nigeria early 2000, 2001, 2002. When they came in, their SIM card then, in fact, at a point, we were buying SIM card for 30,000 naira. The same SIM card we are buying for 100 naira, 200 naira today. It used to be they started with 6,000 naira, from 6,000 naira, 20,000 to 20,000 to 30,000 naira. So when other competitors are then coming into the market, the Econet, the Econet, the Globalcom, all of them, when other competitors are then coming to, so they now reduce the price, So and then at a point they were begging people, some years back, they were begging people they even collect the SIM card. They were looking for subscribers, so they were given the SIM card for free, So this is what, so because as at that time, when MTN came into Nigeria, they were the first people. MTN was the first company to enter Nigeria telecommunication in the mobile industry. Not, of course, there were some Intercontinental, was it Intercontinental? We have some of them that were doing communication in the communication industry. As at that time, NITEL was there, as a government entity. We also have Interlink, so many of them, during that period before MTN came. But the mobile communication, telecommunication, the first company was MTN. So because that product was unique and there's no competition, there was little or no competition, and that was why they were able to charge high price, and there are market for the product. So people are willing, they are ready to buy, because before MTN came into Nigeria, if you have phone, it's only big people, only the big guys that are using cellular, Turaya. They were using Turaya at that time, When you see people holding phone, hey, guy, big boy, But when the M10 came, everywhere, everybody wants to use. In fact, that time you have to guide your phone jealously. Every minute you are glued to your phone because it's new. Nobody has it. It's new. If you're able to buy it that time, you're a big boy, you know. Like now, everything it has become water. Nobody cares about whatever the kind of phone or SIM you are using. Nobody cares again, you know. So this is what we are saying. So as pricing, skimming pricing is what is ideal in this situation to price the house because the company has embedded technological innovation into the housing activities, and that is why. So when as they are new in that place, they have to charge a higher price. Okay, they will charge a higher price in order to take care of some customer segment. But when competitors are then coming into the industry, okay, when they're now coming into the market, they will have to lower their price in order to attract other segments of the market or other customer segment of the market. So this is what examiner is expecting you to say. Yes, Shola, sorry for keeping you waiting. Talk to me. Walkie-talkie. Frank, talk about walkie-talkie. Yeah, you remember. Yes, Shola, what's your question? Let me open to the golden book and show you how I treated that. So this is where we are going to call it a day. Shola, okay, you are okay. Oh, don't worry. So let me quickly show you 1 minute. Let me stop sharing this. Let me show you how I answered the number B and C, just for your information sake. I've already explained that. Where are you? Golden book. Main. Just 1 minute, please. Let me bring it out. Oh, yeah. Okay. What's the name of the company, sef?
Clepatoni.
Clepatoni. Okay. Control F. Clepatoni. Okay. Let me just bring the font a little bit more. Okay, that's okay. All right, let me share again. There might be no. Just want to show you how I answered the number B and C part of the question. Okay. Hope you can see my screen, right? I believe so. Let me just show you. Okay. So look at the way I answered the number B part. For example, in number B, examiner is asking you why relevant cost may not be suitable. You should explain the reason why relevant costing may not be suitable to price the house. Okay, so relevant costing concept has been applied in determining the minimum price quotation for the contracts. The relevant cost represents the cost that will be incurred purposely because of the contracts. The minimum price quotation may not be suitable for the contract because, one, the company's intention is to produce minimum price to cover the relevant cost on the contracts. Sorry, the company's intention to produce minimum price to cover relevant costs on the contracts will not be sustainable in the long run. A markup percentage above the break-even point would have been more appropriate for the pricing. In addition, the company's financial situation may worsen off if it cannot earn contribution to offset the organization's general fixed overhead. That's number 1 point. The second point is that Clepatoni Limited is planning to expand operation into other countries in the future. Therefore, funds will be needed to execute the expansion. If the company's expansion is not attractive, the investor will not contribute their finance to undertake it. These are the 2 key points that I provided to answer that number B. Then number C, examiner is asking you for pricing decision to be adopted. Market scheming may be more appropriate in this circumstance to launch the houses in the new country. Market scheming involve, you then define what market scheming is. Market scheming involve a strategy of charging a higher price at the initial stage of a product in the market and later lower the price to attract other customer segments, particularly when market competition is becoming stiff. So like I explained in the case of MTN and other mobile companies. So because when they enter Nigerian markets, they were charging higher price. Okay, they were charging higher price because they were very few. In fact, MTN was the only one in the market, and that's why customers are willing to buy irrespective of the price because no competitor. So this will be possible. This will be possible. This will be possible only if the product is unique with high quality. Then not only that, you can only, what I'm trying to explain here is that market scheming is possible if the product is unique and differentiated relative to others in the market. Competition is minimal, no competition or little competition. Okay, and there is customer demand for the products. During the time of MTN, when they came into Nigeria, of course, we cannot, I mean, we are buying it because we have never used it before. So we believe that it is for high quality, right? Competition is almost zero. Nobody is competing with MTN until Globalcom and Econet and all of that came into the market. Of course, there were customer demand for the products. Customers are demanding, customers are buying it. Those that can afford it, they are buying it as at that time, you know. So this pricing strategy is designed principally to maximize the profit for the products before competitors enter the market. That's why they are charging higher price. So because before competitors will enter the market, let's maximize our profits, and that's why they are charging higher price at the beginning. So as the competitors are entering the market, they now lower the price so that you'll be, of course, they would have established their names. That's why till today, every other mobile company in Nigeria, mobile communication company in Nigeria, they are chasing MTN because MTN was the first in the market. So they have attracted a larger shares of the market. That's why you see that Airtel, Nine Mobile, Globalcom, they are just following MTN. So that is one of the benefit or reward of being the first company in a market. However, just to close the class, however, it is intended that the high quality material and unique energy saving technology used to produce the houses would attract some customer segments who are willing and ready to pay high prices. The fact that other competitors are in the market does not mean that they are going to have different prices. They are going to have different prices. There are some customers that are willing to pay high price because they can afford it. So that means the quality of the houses that those one we have will be different from the general one. So the market scheming, therefore, will enable Clepatoni to recover the amount spent on research and development to design the requisite technology embedded in the houses. So this is the way I answered the requirement number C. Okay. So, and this is going to be the end of today's class. All right. So let me know if you have any question for me so that we can close the class and I will release you. Any question for me? Let me see. Some of you almost half of you have disappeared. No worries. But I can see, I still have Chema with me. Chema Ofobeze, Chema Udeze. I have Imem, Eniolonda, Ezine, Frank, Kingsley, Lovett, Michael, Miriam, Moses, Nancy, Cynthia, Faith. I have Oyinda Mola. I have Sandra. I have Shola. Valtor is on. Zaza is on. Mopelola is also on. Thank you, every one of you, for waiting behind. This is where we are going to call it a day. In our next class, by the grace of God, we are going to have one more question. We are going to solve one more question. The last question tested on the relevant costing. So we are going to test it. We are going to solve it in our next class by the grace of God. Therefore, I want to encourage you, go and solve illustration number. What is that again? Let me check. Oh, I don't have it here. Go and solve illustration number, I think the last illustration, number 6 or 7. Okay, go and solve illustration number 6 or 7 in your learning material share with you. That is the next question that we are going to solve. So I want to say thank you to every one of you for waiting behind. I will see you again next week by the grace of God. Good night, everyone.
Good night, boss.
Yeah,
Good night,
good
sir.
night. Good night.
Good
Good
night,
night.
sir. Yeah.
Yeah, good night, Shoma.
Good night, sir.
Yeah, good night. Take care. Nice sleep. Sleep like a baby and rest well. Tomorrow is another day.